Today on Twitter, I figured I'd do something a little bit funny in light of the bearish price action. I know a lot of people are freaking out right now, but what I posted on Twitter was this image where back at 10K, people were asking, when is the bull market? The next dip, people said, it's a bull trap. The bull market's over. The next dip, people were calling for 3K again. The next dip, it's crashing. Bull market is over. The current dip, oh my God, we're crashing. The bull market is over. You're going to hear this stuff happen over and over again. Every dip we get nowadays, it's really, really emotional. And we have to remember this is probably because, we're in our first major bull market in a very long time, right? So emotions are high. People are really excited. People are really scared. People don't really know what to expect. It's been years, right? We're all basically born again bull market virgins right now, and things are getting really, really emotional. Whenever you see people say stuff on social media, take it with a grain of salt. Emotions are high right now. You got to stay calm. You got to stay relaxed. And of course, that's not really easy when you see this, right? You're going to, the Cryptowatch homepage and you're looking at the overview. And it's just like red. And actually, one of the only coins that's up right now on this list is Matic Network, which in my Patreon, we bought 445% ago. So we're up pretty big on that one in Patreon, which is pretty cool to see. At least there's something good happening today. And if I may mention, before we get into the video, this is the last day you have. The final day is today to get $35 a month to get access to my altcoin portfolio. Now, Bitcoin's chart is really interesting. There's a lot of indicators I want to go over. I want to discuss the trend, how this still resembles 2017. So guys, let's dive in and go over all of this stuff in today's video. Now, moving on to the Bitcoin chart, looking at Bitcoin on the daily, we're going through our second major correction. This is only the second pullback since we broke 20K. So we've had one run up, one pullback, a second run up, and a second pullback. If you ask me, this all seems like pretty standard price action. And as I'm making this video, Bitcoin is trading at 43,600, getting pretty close to the 42K level, which is our previous high from January 2nd. And if you guys remember what I said in my previous video, I said I'm still very bullish on the market, but we could test 42K before seeing the next major run up. And that's kind of what's happening now. So what's happening at the moment seems quite normal as it stands right now. If we just flip this chart to 2017, the 2017 chart right now, well, it looks pretty similar, right? We broke above the all-time high. We had our first run-up, first pullback, second run-up, second pullback before actually, going on our major parabolic mania phase. And that's the stage that we seem to be in right now here in the year 2021. And right now, Bitcoin is in this falling wedge on the daily. Generally, falling wedges do play out to the upside usually. And we can see that Bitcoin is now coming back to test this upward sloping trend line here. We're still within this upward sloping trend. We're also squeezing in pretty tight now with this falling wedge pattern. And the falling wedge seems to be coming to an end right around that 42K level, which could be pretty nice for the bulls if the falling wedge does play out to the upside. And there is a lot of fear here at this point at the previous high. If we do play this out to the upside, the current state of fear in the market will quickly flip into bullishness, right? Those emotions are high. Once you see that nice green breakout candle, those high emotions will likely flip into being very bullish. That's usually how it goes. One thing that does potentially support the bullish breakout of this falling wedge is that we do have possible hidden bullish divergence forming here on the MACD. It's not confirmed yet, but we may be looking to form hidden bullish divergence on the MACD histogram here on the daily. So that's one thing you could be looking out for right now. We actually did something similar from this low here, from below 20K to the next low, right? We also had hidden bullish divergence from this low to this low, and then we ran up again. And now we're potentially looking to create some hidden bullish divergence here at that 42K level. And that's something that I'm keeping my eye out for right now. Now, again, I could be wrong, and I'm not a financial advisor. My analysis is leading me to believe that, this bull market's not over. We're probably going to see a lot more upside, but anything is possible. If the stock market crashes, maybe Bitcoin won't do so well, and maybe that would lead us into, a scenario of like a long consolidation before a run up again. Stuff like that's always possible as well. Overall, the demand is really high for crypto, and crypto is the future. So no matter what happens, we're likely going to be going and hitting new all-time highs. That's what you guys really need to understand. It's not going to zero. And also, people have been asking me, what's up with the 21-week EMA? Do you think we're going to come back to test this blue 21-week EMA? I'm sure you guys have heard me talk about this in the past. I'm sure you've heard other YouTubers talk about the 21-week EMA in the past. And in the past, 2017, the 21-week EMA did, this blue line, it did act as, the major support of the bull market. Now, in this current bull market, it's really not in play. Not really. Most of us thought it would be, but it's not. It's actually the 10-week EMA that we're testing the most of the time. It's the 10-week. So what does this tell us? This actually kind of points to this bull market being a little bit more rapid and powerful, right? We're seeing more exponential growth now than we did in 2017. So with that being said, the lengthening cycle theory is actually false. It's pretty much proven false at this point. I'm sure some of you guys have heard this lengthening cycle theory, and I think that's totally false. We're actually speeding up because of the global economic environment right now and all the money printing. Things are actually speeding up. Take a look at the stock to flow model for Bitcoin right here. We're trading, we're actually keeping up with that midline of the stock to flow model. Now let's look at this exact chart in 2017. Here is 2017. We actually exited the stock to flow channel on these parameters, and we weren't really riding this midline. It was a lot different. It was a lot different in 2017. It was slower. Now it's speeding up. It looks stronger. The bull market actually looks more powerful right now than it did in 2017. So just keep in mind, as things become more parabolic, everything becomes faster and the swings become larger, and it gets a little emotional for people at times. But the people that make the most money, the people that have made the most money in Bitcoin history, are the ones that actually just did the long-term hold, and they just rode the trend, right? They just rode this trend. And keep in mind, so far since March, every single dip was a buy. Every time. And this is something I said on Twitter. I said, in Bitcoin, important update, every dip was a buy. All of them. And then I posted this single candle, all-time candle from 2009 to today. And it's just one giant green candle. And I was saying, every dip was a buy. Now, of course, at some point, it's not going to be that way. At some point, we are going to get a blow off top. But currently, I don't see that. I don't see us being at a blow off top just yet, right? In order for me to be convinced that we're at a blow off top, I need to see, record volume levels coming in with a type of, market structure that would suggest that. Like over here in 2019, we had this major weekly rejection wick, right? And we had some pretty big volume levels there. That volume level exceeded all previous levels leading up to that point. And that was, sub 20K type of stuff. And that was a pretty good signal. Same thing with 20K. We had record volumes on the peak at 20K, right? And even the March crash low, we had like record volume higher than the 20K peak area, right? So usually these major market tops and bottoms do line up with a huge spike in volume. And so far, guys, it's not there. We have not gotten anything, major yet. And just like 2017, the volume built all the way up to that new all-time high. And I do expect something similar to happen, as this bull market persists, that the volume will probably build up to that new all-time high, probably. And Ethereum is looking a little bit ugly, guys. We're dipping below the 2017 or 2018 high. If Bitcoin does catch some support at the bottom of this falling wedge, then Ethereum is likely going to get a bounce, and this would be the area of maximum opportunity if Bitcoin can catch support at the bottom of this current falling wedge, right? We'll see though. Anyway, guys, I think I've rambled enough. I think you guys understand my view on the market. If you like the video, smash the like button, subscribe to this channel, and be sure to join Patreon today. Now, within the next few hours, prices will go up tomorrow, starting tomorrow, so join today. And also be sure to sign up with the Cryptowatch platform. I use it every hour of my existence, basically. I'm always on Cryptowatch. You can chart and trade on this platform, also do portfolio monitoring. This portfolio right here is actually just my F2 staking position. I do have some ETH staked on the Kraken exchange here, but you can do all kinds of stuff on Cryptowatch, and it's free, guys. It's totally free. But that's gonna be it for me today, guys, and I'll see you all in the next video.